We have stability, the markets are optimistic. There's governance, there's proceeding.
Investors can be classified into three groups. You have one that is averse to risk, we have the one that is a lover of risk, and we have one that is neutral.
I report this market every day for 22 years, not just Nigerian market, but globally. What you report first and foremost is the equities.
Over the years, the vital roles played by the capital market in the achievement of growth has enabled government, industries, corporate bodies to raise long-term capital for the purpose of financing new projects, expanding and modernizing industrial concerns. However, the Nigerian capital market has been through difficult times. A look at yearly returns shows a steady growth from 2008, which had a loss of 14.45%, 2009 with a loss of 1.86%, in 2010 a loss of 1.85%, and in 2011 0.77%. The market has since picked up, recording returns of 25.84% in 2012 and 11.99% at the moment in 2013. In 2008, the market crashed and is slowly picking up, with the regulators coming up with various initiatives to fully restore investor confidence.
I believe that, yes, stocks were overvalued by 2008. The collapse was bound to happen because of fundamental overvaluation of stocks. So that has been corrected over the last few years, as most of the prices have dropped to the point where the fundamentals are actually undervalued now. So first, there is a fact of a correction has happened. The market has bottomed out. Then there's political risk that came in 2009, Yaradua, all of those issues, and then elections 2010, 2011. So the political risk has also been surmounted. We have stability, the markets are optimistic. There's governance, there's proceeding. So that has also been factored out of the prices. And then finally, you have all those initiatives. I think the market making, all of those reforms, cleaning out. After all of what has happened, all of those were now the final straw that have improved confidence in the market. People now see opportunities. People believe the market has been sanitized, and therefore there is better confidence.
Our key initiatives for 2013 include for the targeted market development efforts, the relaunch of the alternative securities market ASIM, derivatives feasibility study. As you know, our roadmap calls for the introduction of options and financial features before 2016, starting 2014. So we're going to start doing the groundwork for that.
A close look at sectors in the Nigerian Stock Exchange showed the financial services, consumer goods and services the most performing in the capital markets. The oil and gas sector, which was lagging behind, is beginning to pick up. After being majorly hit in 2012, the oil and gas sector now has a return of 15.11%, the highest in the market.
Right now we have about 23 or 25 market segments, but only about 3 are constantly active. Now, a number of stocks are actually underpriced. Now, let's be very frank. In terms of proper valuations, First Bank is underpriced. Nigerian Breweries is underpriced. Guinness is underpriced. If you say Oando is underpriced, oh, fine.
In 2012, the deal between Oando Oil and ConocoPhillips was, according to media reports, among the top 40 investments in Africa. The deal worth $1.79 billion saw Oando Oil acquire ConocoPhillips' entire business interest in Nigeria.
I expect a number of indigenous oil retailers to take the kind of step that Oando has taken. Oando set itself out from the very beginning as a company with a difference. When it started, Oando didn't call itself a petroleum marketer. It calls itself an energy trading company, and used a few other subsidiaries and said that, look, there's more to do, that we need to participate in the oil sector. And every day, we've all been crying that the crude oil production sector had been dominated by the foreigners or by the foreign companies, which includes ConocoPhillips, ExxonMobil, Esso, what have you. But Oando has just used a backdoor approach to get in on that game. Now, what stops Forte Oil? What stops Con Oil? What stops others from strategically looking at it? But you say there's so much slush and irregularities and profit taking in the subsidy importing and exporting fuel. But Oando is a strategic organization that looks like we need to get in on the game. We can't just sit down every day and blame foreigners for being the chief player in the country's oil production. We need to have Nigerians on in the game. So buying ConocoPhillips is a strategic business. In fact, in some other countries, the government would actively encourage Oando and do a lot for Oando and say, look, you took a very bold step from being an oil retailer into crude oil production.
Oando Plc in December 28, 2012 commenced the process of raising 54.6 billion naira on the Nigerian Stock Exchange and the Johannesburg Stock Exchange through the issuance of 4,548,236,276 ordinary shares of 50 kobo at 12 naira per share. A number of top shareholders, stockbrokers and analysts have either chosen to endorse or simply share their thoughts on this development.
So right now, the people coming out to raise issue are reading the market very well. Timing of the market is very important, and that's what they have taken advantage of. Because people are now having some confidence, particularly portfolio investors and foreign investors. Retail investors may just cash in. But I tell you, the rights issues coming on are meant for the existing shareholders of the various companies. And therefore, those various companies, because they probably bought their shares at a high price, the rights price is quite interesting and very, very appetizing. So they can come in now and try to, in other words, reduce the loss they made in the past. So they should be looking at these prices as good, because the fundamentals of the company, Oando or any other one, is quite good. So on that basis, those right issues are coming at the right time, and investors should take advantage of them.
It has been a bold organization. Strategically, it has kept on moving. It's quoted on the Johannesburg Stock Exchange, Toronto recently. So yeah, it has been a very bold company. Its returns can be better historically, but strategically you can't fault them. So it's a company that investors should take an interest in, at least in getting to understand more where it's going strategically.
Coming with a rights issue, you know, it shows the problem we're having in the market today, and it's been like that for the past 3 years. The problem is that the primary market of the capital market has been completely prostrate. Companies are not coming to raise fresh money from the market. So the best you see these days are rights issues. And what are rights issues? They are issues, you know, being offered to the existing shareholders of the company. So it's their company and they are recapitalizing it. It's not as if they are taking the company to the market for majority of Nigerians to benefit. And sometimes owners may not have as much capital as the company would need in order to fund this expansion. For me, Oando still looks like a good investment.
Instead of us to borrow from the bank and working for the bank, let us now come back to our shareholders and raise this money from them, and will now enable us to work for the investors who invested in the past years. You know, and that's the only way you can guarantee returns on the investments, by working for the share, not working for the bank.
Oando presently, in third quarter, they have made over 9 billion naira profit after tax. And basically, looking at it, when you project the end of the year profit after tax, Oando may likely make like 12 billion. And if that is achieved, then that translates to over 5 naira annually per share. And looking at that, you see the price earning is about 2.4 times. So it's telling you that Oando is grossly undervalued. And being an undervalued share, coming out with a right is a privilege for the investing public. to buy into it so that they can gain the benefit. And Oando is also paying dividend. And so all these things are the good things attached to Oando. Coming to the market to look for equity, I think is a better way of looking for a long-term fund instead of taking debt. Because if you look at the capital structure, more of them may not add value to that firm again. So it is better they go into equity. And one of the ways is by this right you are talking about. And the privilege is given to the existing shareholders. So my advice is for the existing shareholders to take up the opportunity.
One, there's a crunch in the economy. A cash crunch is there. Two, those who have the money are afraid, except the very few who understand the real dynamics of the market. Oando is a very good buy. It's a very good buy, very stable, and very good. It has a very good dividend and bonus history. So those who know it and they have the money, they will definitely key into it and they will make their money.
Now, this is a very heavy transaction business. So Oando needs the money. So it needs to go to the shareholders. I'm a shareholder of Oando. I own very few shares in 2004 when Oando did their last public offer. Okay? Then Oando is a value company. And I see this, a company that has value will continue to look beyond the retailing, what you call merchandising, buy and sell, which we are all used to, into crude oil production. Now, give it 12 months, somewhere down the line. With crude oil around $110, $112 a barrel, even at $70 or $80 a barrel, is it a very good investment? Oando will still be able to come up with it. But getting into the crude oil business means that Oando now getting in the big game. Now we're talking about shale gas. Who knows where Oando goes next? Perhaps into gas. Because you already have Oando gas for local consumption, for cooking. But in terms of LNG, whatever, shale gas, what have you, once you get in through the door, you can begin to make further advancement along that line. But if we just sit down and continue retailing and carry portfolio to Abuja to collect subsidies every month, that's what Oando just said, look, we need to raise the game. We need to raise the name of this job. So let us approach our shareholders and say, look, we need more money. But the right issue is a very good step in the right direction, because when Nigerians support it, you are supporting an indigenous organization that will create jobs here. And you're going to see the impact on the balance sheet of Oando.
From the outlook of the market already in 2013, expectations are high. Many will be expected to take long-term investment and exercise their rights to either take right issues, like in the case of Oando, or simply trade it.